Okay, so have you ever stopped to think about what kind of real estate investment really acts as a proper hedge against rising inflation? Something that helps protect your assets. Or maybe how a popular vacation spot could actually be a strong signal of where global capital is flowing, telling us where the money's really moving. Today, we're diving deep into something I find really fascinating, how these big, all-inclusive resorts have become such a major magnet for bulk real estate investors. And this isn't just about, buying property. It's a surprising mix of consumer behavior, really powerful branding, and some innovative financial thinking. Yeah, our insights for this deep dive are pulled from some pretty eye-opening sources. We've got perspectives from Dr. Pooyan Ghamari. He's a Swiss economist, founder of the ALN platform, and we're also looking at their blog. So our mission today really is to unpack why these huge resort projects attract so much large-scale investment, and maybe more importantly, what they tell us about the future of hospitality and, frankly, what you value when you're looking for experiences. It seems pretty clear these resorts aren't just, places to crash. They seem to be actively reshaping the hospitality sector, turning it into this kind of ecosystem that fuses lifestyle, branding, and financial innovation.
Absolutely. And what's really interesting is how Dr. Gamari talks about them. He stresses they're much more than just real estate assets. He calls them economic signals.
Economic signals.
Yeah, think of them like maybe a sophisticated barometer for the market. They show how consumer behavior, global capital flows, and importantly, brand credibility all intersect. Especially now, in our rapidly digitizing world, it's not just about someone booking a holiday. It's about understanding these deeper currents in the global economy and what people are actually prioritizing.
Okay, so if there are these economic signals, what specifically are they telling us? What kind of insights are they flashing about where money and consumer preferences are heading?
We'll take their high occupancy rates, for instance. That doesn't just mean lots of happy vacationers. It signals pretty robust consumer confidence, right?
That people are spending.
Exactly. And then when you see these massive investment flows pouring into specific regions where these resorts are popular, well, that tells you exactly where global capital sees stability and where it sees potential for growth, even when things feel economically uncertain elsewhere. It's almost like this complex economic dashboard, giving us real-time insights into the underlying health of the market and, crucially, consumer priorities, especially, in a world where experiences are valued more and more.
That's a really powerful way to look at it.
Yeah.
So if these resorts are broadcasting such clear signals, what's the strategic appeal for the big investors, the bulk investors? What makes them uniquely attractive to that kind of large-scale capital?
Well, a big part of it is their comprehensive offerings.
You mean like the food, the rooms, the activities?
Yeah.
Everything.
Precisely. Accommodation, entertainment, dining, wellness, all sorts of experiences, everything bundled under one single brand. And that comprehensiveness, it translates directly into some key benefits for institutional investors.
Okay, like what?
Well, these resorts often have inherent scalability. They're sort of designed to grow or adapt efficiently to different market sizes. That's appealing.
Makes sense.
They also tend to offer more predictable revenue models. That's obviously a very desirable trait if you're looking for stability with your investment.
Always attractive, yeah.
And crucially, they have this ability to package diverse services into one investment unit. That simplifies the whole investment process quite a bit.
So it's a neat package.
It's a complete package, exactly. And what's more, they've shown this remarkable capacity to thrive in both tourism-driven and mixed-use markets. They're adaptable.
That adaptability definitely sounds incredibly valuable, especially, like you said, given the current economic climate. You mentioned Dr. Ghamari really stresses how, in this age of rising inflation and consumer demand for experiential value, these bundled projects act as crucial hedges. Can you unpack that a bit? What does he mean by a hedge in this specific context?
Of course. So when we talk about a hedge here, we mean an investment that helps protect against financial losses somewhere else, maybe in another part of your portfolio, or protect against broader economic downturns like inflation.
Okay, like a buffer.
Sort of like a counterweight, yeah. Protecting your portfolio from that economic turbulence. Think about it. In an inflationary environment, your traditional cash assets might lose purchasing power, right?
Right.
But these resorts, because they offer this comprehensive experience where prices can potentially be adjusted, and because the perceived value is high, they can often maintain or even increase their relative worth. People still look for experiences, for leisure, and a trusted, all-inclusive brand provides that perceived value even if prices creep up.
Oh, okay. That makes perfect sense. So it's not just about providing a good vacation. It's about economic resilience baked in.
Yeah.
So what are the specific dual benefits then, the things that make them so attractive?
Precisely. Resilience is key. They deliver, first, steady occupancy. That means people consistently want to go, they book rooms, and often they come back year after year. Consistent demand.
Okay, steady income stream.
Exactly. But second, and this is really important, they build significant brand equity.
The value of the name itself.
Exactly. That intangible value of the resort's brand, its reputation. That allows them to potentially command higher prices over time and foster incredible customer loyalty. So this dual benefit steady business plus growing brand value makes them exceptionally attractive to investors, particularly those seeking assets aligned with long-term macroeconomic resilience.
They're looking for things that can ride out the storms.
They are. They want assets that can withstand economic downturns and inflation because fundamentally, people will likely always seek out value and experiences, especially within a brand they trust. And, this commitment to a strong brand, which we were just discussing, it actually ties into an even broader trend that Ayland identified in their research. It's about how cause-related marketing has shifted. It used to be maybe an optional add-on, a bit of nice branding.
Right, like a nice to have.
Exactly. But now it's becoming a genuine driver of investment decisions, a central investment lever, as they put it.
Interesting. How so?
Well, what this really means is that investors are increasingly recognizing that you, the consumer, want your spending to align with your values more and more. So if a resort clearly demonstrates a real commitment to, say, environmental sustainability or maybe supporting the local community, that doesn't just attract guests anymore. It actually attracts investors who see that values alignment as a driver of long-term demand and therefore financial viability.
So consumer values are directly influencing where the big money goes.
It strongly suggests that, yes. It implies that our collective desire for meaningful experiences for brands that stand for something is directly influencing capital flows and how major investors choose to deploy their funds. It's quite a shift.
Okay, so let's quickly recap this deep dive then. We've seen that these all-inclusive resorts really represent this powerful convergence point. It's real estate, yes, but also evolving consumer trends and some pretty sophisticated financial strategy all coming together.
Yeah.
And they seem to be proving themselves as remarkably resilient assets, especially in today's changing economic landscape.
Absolutely. Their appeal to the large-scale investors, it really boils down to that comprehensive nature, their scalability, the whole package, and maybe most importantly, their unique ability to act as that hedge against economic shifts. They do that by providing relatively consistent occupancy and by building that significant, long-lasting brand value.
Right. So given all of this, here's maybe a final thought for you, our listener, to consider. What does this rise of these all-inclusive investment magnates truly suggest about what we as consumers fundamentally value when we seek out experiences and leisure time? And perhaps, how might that underlying shift in what we demand shape the future, not just of travel, but maybe even things like urban development? Something to think about.